Hi everyone, I'm Paul and welcome to my review of Lesson 39 of ICT's 2022 Mentorship Program. Today's video is going to be a super interesting one because we're going to be reviewing the model that ICT's been building with his son over the course of the Mentorship Program. I think that this video will provide some key insights and a good framework for both new and developing traders as to how they should be approaching building their own trading system. But before we do, if you enjoyed today's video, please give it a like because that helps other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. These are quick, easy, and free ways for you to support my channel. Lastly, if you'd like to hear more from me and join a community of like-minded traders, then make sure you check out the link in the description where you can subscribe to my free weekly newsletter and to also join our Discord. Now that that's out of the way, let's jump into today's video. Today's video is a review of Lesson 39 of ICT's 2022 Mentorship Program. So we'll just quickly run through the outline for today's video. So first of all, we're going to be looking at Caleb's model. So Caleb is ICT's son, and we're going to look at the model or the framework which ICT has helped him to put together over the course of the Mentorship Program. And then we're going to look at a trade on the ES or the S&P on the 9th of June, and we're going to use Caleb's model as a bit of a framework. So we'll start today's video by going through Caleb's model. Now, just by interesting coincidence, Caleb's also the name of one of my sons as well. So that was a funny coincidence. And we'll just go through, the underlying concept behind all of ICT's teachings, which is his algorithmic theory, and it's based on time and price. So this is taken straight from ICT's video, but I think it's really poignant just to talk about this now before we start working through, the various parts or the framework of Caleb's model in a bit more detail. So the first important thing is that price levels or price is useless without time being considered. So time is the thing that we look at first. And so the things that we're considering when we're looking at time is the time of the day, the time of the week, week of the month, month of the year, and then obviously things like seasonality. And then following on from this is that time is no use to us if price isn't at a specific PD array. So these key concepts of time and price will become a little bit more apparent as we go through Caleb's model, and we're just going to look at those individually in the video now. So when we start thinking about time specifically, and the framework that ICT's used with Caleb in his model is we're looking at specific times of the day. So the specific times we're referring to are 8:30, so that's our 8:30 open, our 9:30, which is the equity open, so the 9:30 open, and then we're also looking at 1:30, so that's a specific time straight after lunch, so lunch being between 12 o'clock and 1 o'clock New York time, and then 1:30 is the time that ICT specifically starts to look at the market again for setups. Now, one of the extra ones that I've added in here is that period between 3 o'clock and 4 o'clock, which is that market on close macro that ICT often talks about if you hear him in some of his videos. So layered onto this is the specific days that ICT is looking for his son to trade are the more high impact news days. So he's either looking at orange or red news events. Now, in terms of the price-based concepts that we're looking at, one of the first things that ICT talks about is that we're actually looking for liquidity pools to target, which are in line with our bias. So if we have a bearish bias, we're looking at a liquidity pool lower, which price is going to draw into. If we had a bullish bias, we're looking for a liquidity pool higher, which price is equally going to draw into. So our starting point is we're looking for setups to target a specific pool of liquidity. And in this case, the entry or the trigger model that Caleb's chosen to use in his particular framework is the fair value gap, which we've been learning about throughout the 2022 mentorship program. Now, one of the key takeaways that I think is really important that ICT highlights throughout this particular video is that he's only getting his son to target 5 points. So what this means is regardless of the liquidity pool target and how far away that is that once that 5 points has been reached, the trade's closed down, and then he's watching price as it then runs towards that liquidity pool. So he's no longer in the trade, he's then just watching the price action. And the reason why this is important, and I think this is probably the biggest takeaway for new and developing traders, is that this creates a really low and achievable threshold for success. And you hear ICT all the time throughout his videos talk about targeting that low-hanging fruit. And I think that's really important for both new and developing traders to help them build that confidence and start to trust in their model. And the other really important thing that just targeting this 5 points does is that it helps as a trader to understand that you're always able to go into the market and have the opportunity to extract that 5 points. So it allows you to build discipline and patience, and also just alleviate that fear of missing out on trades. So just knowing that there's always trades available in the market, and just because something's moving that you don't need to be participating. And you'll hear ICT talk about this a lot throughout the mentorship program, where he talks about, not pushing your edge. So, the more you use your edge, the more you dull it. And so this is just helping to, reinforce that concept that the market's always there. These opportunities are always available. They're always repeating. And so you can take your time. You don't need to be in the market every single day. I think this is a really smart approach for someone that's new to trading, and especially someone who's new to committing capital to the marketplace, because it allows you to do it in a very low pressure environment. And obviously, once you've done this for a while, you build that confidence and you start to trust in your model. And that's when you can start to bring in, money management and the power of compounding. And then all of a sudden, those 5 points, you can start to do it with more contracts, and then you can really start to build the equity in an account. So these are just the key points that I was able to take out of lesson 39, where ICT was describing this framework that he's built with Caleb. And so hopefully I've captured all the points. I think it's worth watching this video yourself. So what we'll do now is walk through that trade example and start to highlight some of those points from Caleb's model in an actual trading day. So we're looking at our daily chart on the ES or the S&P 500. Now we've been talking about the price action in the last couple of videos, and you'll recall from those lessons is that we've been anticipating that the market or that price would attack this buy side liquidity, and that if we actually reach that level, then we'd start to accelerate potentially into these relative equal highs, this buy side liquidity, which is confluent with this bearish fair value gap up here. Now you'll see from the last couple of days of price action is that we just haven't got that. So we've had this consolidation phase, and the fact that we haven't been able to take out this buy side liquidity starts to lend more credence that we're actually going to trade lower, and that we'll actually start to trade down into this fair value gap and potentially back down into this volume imbalance down here. Now on Twitter, ICT actually calls out this 4070 level down here. And the reason why he called that out is we have this sell side liquidity, these relative equal lows down here. You can see as we start to paint more lows here, we're building up more and more sell side liquidity. So that's why these relative equal lows become a powerful draw on price. And so that's our expectation, and that's why ICT highlighted it on Twitter. So you can see if we expand down into these relative equal lows, we're going to be getting a high range day. And we obviously have this bullish fair value gap down here. And so it's quite possible that we'll reach through these relative equal lows and punch potentially down into this bullish fair value gap. So what we'll do is we'll click the market forward and just have a look at what happened. And so you can see that's exactly what happened. We had this high range day. We've attacked the sell side liquidity, these relative equal lows, and traded right down to that mean threshold inside this bullish fair value gap just here. So we've zoomed into our hourly chart now, and I'll just orientate ourselves. So this is that buy side liquidity on the daily chart that we'd been anticipating that price would attack, but it hasn't done that. It's failed to attack that price level or be drawn to the liquidity that's residing above that price level. But here you can see the relative equal lows, this sell side liquidity that's been slowly building down here. And so this is what we're looking at price to attack. And you can see this is that bullish fair value gap from the daily chart, which is obviously transposed down onto the hourly chart. Now, if we just zoom in a little bit more, so this is the price action from the previous day, being the Wednesday, so the 8th of June, and this is the 9th of June. So this is a session that we're going to be specifically looking at. You can see if we mark out our price range, we get our 50% level here, and there's a bearish fair value gap just here. And if we extend that across, you can see as we go into the next session, we trade above the midnight open, we trade into this bearish fair value gap. You can see the candles largely respect that. We actually have an order block here as well. So this is an up close candle before we get this down move where there's an imbalance. And you can see if we draw out the open across in time, so this is a bearish order block, you can see the market just touches that before trading lower. So we come back towards the midnight open. You can see we consolidate in that area before we accelerate down towards the sell side liquidity, those relative equal lows. So this is that 4070 level that ICT called out in Twitter. And then you can see we just get this acceleration as we come into the close, into that bullish fair value gap that we talked about on the daily chart. So zooming into our 15-minute chart now, we're just getting a little bit more granular detail from the 1 hour chart that we were looking at before. So what I've added into this is we have our 8:30 open here in red and extended out in time, and then we have our 9:30 open, again extended out in time. So we now have each of our three opens being midnight, 8:30 and 9:30, and as I mentioned previously in the video, these are our three key opens, and so this is a foundational part of that time concept in our algorithmic price theory. And so as before on our 1 hour chart, we can see as we came out of midnight, we traded higher, we traded into this bearish fair value gap. And if we look across to the left here, you can see we actually have a bearish fair value gap on the 15-minute chart as well. So we have two confluent fair value gaps, so bearish fair value gaps at practically the same level. So we've got a lot of confluence in this particular area here. And you can see we also have our consecutive up close candles, bearish order block here. And if we extend that out in time, again, you can see the market trades up into that very precisely before we get a sell-off as we come into that 8:30 open. You can see as we come into 8:30, we take out this sell side liquidity before the market reverses. We come back up as we come into the equities open at 9:30. You can see the market comes back. We come back up to this level, so we come above the midnight open before the market then rebalances. We get a bit of a consolidation here as we go into the lunch, and then you can see as we come out of lunch, so this candle here at 1 o'clock, so you can see this move upwards takes out all the buy side liquidity. So the high from the lunch session, which ICT very often talks about as a prerequisite for a move lower, is we get that move after lunch, which takes out the buy side liquidity. In this case, we're expecting lower prices. So it takes out all of those stops. So it generates that liquidity event there for smart money to be going short as we then come into the end part of the session. And then you can see we get a little bit of a consolidation, but once that gets going, it's just all one-way traffic right into the close as we come into that bullish fair value gap right down into that mean threshold from the daily chart. So we've zoomed into our 5-minute chart now, and we're just obviously looking at the day's events in just a lot more detail. So we have our midnight open just here. We have the equities open at 9:30 just there, and obviously our 8:30 open is going to be approximately here. We have our lunch session just here, and then obviously this is the market trading into the end of the session, and we have our bullish fair value gap. This is the top line of it here at 40.41, and we've obviously traded right into the center of that. And this blue dotted line here is that 40.70 level that ICT called out at the beginning of the session. So this is what we're expecting price to target, and then expecting a run deeper into that fair value gap from the daily. So that's where we are on this 5-minute chart. This is that bearish fair value gap that we had on both the 1 hour and the 15-minute chart here. So there was those confluent fair value gaps, and obviously the bearish order block just up here. So we can see how price reacted to that level after we sort of came out of midnight. We traded around that level. We went up into a premium. So we went right up into that bearish fair value gap. And remember, this is what we'd be expecting to see given our power of 3. So we'd expect to see the high potentially painted in London, which is what happened in this example. So this is our accumulation and manipulation. The market then comes back down to this midnight open. You can see we trade below that. We take out this sell side liquidity here as we come into 8:30 and then the 9:30 open. The market retraces, it comes back towards that midnight open, taking out all of this buy side liquidity. We then get, the sort of normal consolidation or volatility we might get around the open here. You can see we go into lunch. So this is that whole lunch period just here. And this is that high that I was talking about earlier in the video that was created during the lunch session. Then as we come out of lunch, we break this consolidation, the market starts to run higher. We take out all that buy side liquidity, so all of these stops are triggered here. So smart money is getting short here, ready for that run into the close. And so once smart money is set in their short positions here, we get this run down to that initial level that we talked about, that 40-70 level from the daily chart, those relative equal lows, the sell side liquidity here. And you can see once we hit that level, we just get that acceleration lower straight down into the middle of that bullish fair value gap from the daily, and then we obviously trail into after hours trading there. So we're zooming into our 1 minute chart now, and we're specifically looking at the AM part of the session. And so you'll recall from the model, time is a very specific part of the framework, and the two specific periods that we're looking at in that AM part of the session is the 8:30 open, so just here, and then the 9:30 open, the equities open just here. So Caleb's model actually has two opportunities to trade in the AM session, and then basically the way it works is that if he takes a trade, say at 8:30, and gets his 5 points, then he's out for the rest of the day, and he can either day trade the 9:30 or the PM session. Equally, if he trades the 8:30 session and he has a loss, he has the opportunity to then go and trade again in the 9:30 session or the PM. But the point of the whole system is to just take the 5 points and then either paper or demo trade the rest of the day. But there is also the opportunity that if he takes a loss in one part of the session, is to then use one of those other times of the day to then take the opportunity for another setup. And so you can see before we even start talking about price, we have very specific times of the day where we're actually at our charts and trading, and for the rest of the time we're just observing. And so if we start off with our 8:30 open now, we can see the market trades higher. We take out the buy side liquidity here. So we have a short-term high here. We have a run on liquidity there. So you can see we get this displacement lower. So we get this powerful move. And in the process, we have our fair value gap formed. And we also break a short-term low just here. So if we look at our fair value gap here and we just stretch that across, you can see it's our 1, 2, 3 candle formation, and it's between the low of the first candle and the high of that third candle. And in this instance, we would take our limit off the high of that third candle, and you can see the market trades back up into that area here. And then we immediately get a reaction as we run down towards that sell side liquidity. Now this sell side liquidity is actually at 41.01, and our entry would be up here at say 41.14. Now remember, under the rules that ICT's helped put together with his son, is it only looking at 5 points. So you can see we'd trade up here and then we'd be getting out down around here somewhere, so just at about 41.09, which would be around here. So you can see that's giving up a good portion of the move. The move goes all the way down here. So there's an easy 13 or 14 points. So there's another 5 points easily in this particular move. But the rules are, again, to take the 5 points off here and then let price run towards that liquidity target. Now, as ICT talks about in the video, Caleb actually wasn't taking trades on this particular day. They were just watching, and ICT actually takes a trade at the 9:30 part of the session. And so in terms of that specific trade that ICT took, he actually goes short. From memory, it's somewhere up here. So he actually makes the call down here that he's expecting price to reverse and start to trade back up into this bearish fair value gap that was created on this move lower. So he takes his short position here and then he allows it to run. From memory, he takes partial profits here and then he's waiting to see what happens. He's obviously expecting price to run towards that 40.70 mark that he referred to in his Twitter post, but we start to get a consolidation here and then the market starts to trade higher. Now, the reason why he chose to close out the majority of his position here is his view is that price, after it's consolidated here, it starts to trade higher, and you can see we start to trade deeper into this up close candle here. So this up close candle is our bearish order block, and we'd be expecting it to support price. So we wouldn't expect price to come through this level, but obviously as it starts to trade up into the open of that candle, that starts to indicate that this support level is not going to hold, and that's why ICT took a partial here before completely shutting down the trade. And you can see that was quite well timed because the price continues to trade higher, we take out all of this buy side liquidity, we come back above the midnight open price before we consolidate again. You can see after we consolidate above that midnight open, the market comes back down again. We actually trade into a bullish fair value gap just down here. So you can see the market retraces into that level before it starts to trade higher again, back towards that midnight open as we go into the lunch session. So we're looking now at the PM part of the session on the 9th of June. Now, remember, we have some rules for when we're trading the PM part of the session. And the first thing is well, what is the daily range trying to do? So we know from the beginning of the video that we actually have a bearish bias. We're looking for the market to target that 4070 level and then potentially an extension down into that bullish fair value gap from the daily chart. And so given that we're expecting lower prices, we're expecting price to either retrace or consolidate over that lunch period. We're then expecting price to take out a high from that lunch session, which allows smart money to get set in their short positions before we have that run down into the close towards that sort of final destination that we're anticipating. And so if we look at our 5-minute chart here, we have our lunch session here. So from about 12, so I'll just mark this out, to about 1 just here roughly, so that's about where that is. So you can see we have this high that's painted just before we go into that lunch session. We have a bit of a consolidation or a bit of choppiness over that lunch session. As we come out at 1 o'clock, you can see price immediately starts to trade higher. We take out that buy side liquidity, so we take out all of the stops that are residing there from over the lunch period, so just before lunch in this case. That allows smart money to get set in their short positions, and then we immediately start to trade lower. So in this case, we have a bearish breaker here. So we have these consecutive down close candles, which would have been an order block, but they've failed. So we have a low, a high, and then the market breaks that level, which turns this into a bearish breaker. So we can see that the market then trades lower. We come back up into this zone here before the market starts to trade lower. So you can see if we run our fib from say here to here, our 50% level, our equilibrium is going to be here. So we actually have a bearish fair value gap just here as well. And you can see that overlays nicely. So this is that unicorn setup I've been talking about in the last few videos. So this is when we have our bearish breaker, so our failed order block, which also is confluent with our bearish fair value gap. So you can see how these line up very neatly here, and we get this confluent area here. You can see the market trades back up into this area, and then we get that move lower. So this is a high percentage setup. This is a much higher probability setup than either the fair value gap or the bearish breaker in isolation. So you can see we get a very strong reaction to that. A run first of all down to that 4070 level, and then down into our bullish fair value gap from the daily. And if we zoom down to our 1-minute chart now, we're still looking at the PM session, and we may not want to say trade that close to lunch. We may not feel comfortable with that. We can actually look towards the end of the session, so between 2 o'clock and 4 o'clock, to still take a trade. Now, if we look at this particular piece of price action here, you can see we have our up close candles here acting as support. So you can see the market fails to trade back above these levels once they get set. So this is starting to tell us that the trend is now in place, and we're starting to make a run down towards that 4070 level that we talked about earlier in the video, and then potentially down into that bullish fair value gap from the daily as well. So you can see we have these up close candles supporting price, get a little bit of a consolidation, and this is the move that we're looking at. So you can see here we have our fair value gap, so 1, 2, 3 candle formations. So if I just mark that out here, you can see the market trades back up into that, and then we immediately get a reaction lower as we run towards that 4070 level. And so this particular setup is more of a continuation trade. So we know we have our bearish breaker, we've had our high taken from lunch, so that trend is already starting to get established. You can see we have our up close candles supporting price here. As we start to attack that sell side liquidity, we get our big displacement. You can see we take out this swing low just here. We trade back up into that fair value gap before we start to accelerate lower. We get a bit of a consolidation here as we come into that sell side liquidity, those relative equal lows there at 4070. But you can see as we approach that level, we just immediately drop through it. So if we look at this session on the 9th of June and we use that lens of Caleb's model, you can see how important the time of day is in the particular framework. So we have our midnight open New York time, and you can see how price gyrated above that and below that over the course of the session. We traded obviously above that level at the beginning of the session as we painted the high in London, and that really set the tone. That Judas swing set the tone for lower prices across the rest of the session. We then had that initial setup at 8:30, which is obviously in line with our bias, and there was the opportunity to take 5 easy points there, even though that particular move had, maybe 10, 12 points in it. We then had our next point of the day, which was at 9:30, and that looked like it was potentially going to be the setup for that initial move down to 40.70, but we could see that it didn't actually do that, and we actually used our order block concept as a way of protecting us against the market moving against that position, which is exactly what ICT did. We then saw price come above the midnight open again. Before we went into that lunch period, we obviously had a consolidation over lunch. We had a high painted during that lunch session, actually just before the lunch session. And then as we came out of the lunch session and into our PM part of the session, we had our next period of the day, which we would be focusing on, which would be 1 o'clock. We saw that price took out the high from that lunch session, and that obviously created that opportunity for smart money to get set to the short side as we ran towards that 40.70 relative equal lows, and then down to that bullish fair value gap that we marked out on the daily, much lower than the 40.70 level. But we also covered in the PM session that we don't have just an opportunity there. At 1 o'clock, we can trade between 2 and 4 o'clock if we want to take advantage of that PM session. And in this case, we used our mentorship model in a bit of a continuation type market. Thanks for watching my review of lesson 39 of ICT's 2022 mentorship program. I hope you gleaned some helpful insights into the model that ICT's been building with his son Caleb. I think the really key takeaway for me in this particular video is that it doesn't have to be complicated. A simple, reliable, and repeatable model is definitely the way to go. Now, if you enjoyed this video, it would be great if you could like it, because that helps other people to find it. And if you've enjoyed this content and you'd like to see more like it, then make sure you subscribe to my channel and turn on notifications so that you never miss an update. And remember, if you'd like to hear more from me and join a community of like-minded traders, then make sure you check out the link in the description where you can sign up to my free weekly newsletter and to join our Discord. Thanks for watching, and I hope to see you next time.